What's going on, guys? In today's video, I'm going to show you how to short a stock or short an ETF without having to deal with any options. Options to some people may be intimidating. Maybe your account is not eligible for options trading for whatever reason, but you don't have to worry about that. I'm going to show you a workaround. So some people right now may be looking at the SPY thinking, man, the market is super overbought. We are probably going to get some reasonable pullback. I would love to open a short position here. But again, you don't want to go the options route. You don't understand them. You're intimidated by them. You don't want to pay the premium because the premiums are really high, even though right now the premiums are really low. But maybe while you're watching it, in the future date, the premiums are way too high where it doesn't make sense. Well, there is something called short ETFs. So we're going to jump over to stock analysis. This is the SPY. Right now you can see we're at $455 as I'm recording this. In the past 5 days, we have gone up 1.61%. Now, one of the short ETFs, the first short ETF, I'm going to go over 4 of them today, is the SPDN. That's the ticker symbol right here, SPDN. And you can see it's an inverse of the SPY. Now, it's not going to be perfect because they're dealing with futures and the ETF is doing all that on the back end. You don't need to worry about having an options account or even having a margin account. You could just do this in your regular cash account if you want to open up maybe a short-term short position. So you can see over the past 5 days, the short ETF is down 1.48%. So the SPY is currently up 1.61 in the past 5 days. This is down 1.48. It's not exact, but it's close enough. And we're actually going to jump back over to TradingView, or even before that, you could read right here about the SPDN. It's a Direction Daily S&P 500 Bear One-Time Shares. And yeah, you could read that. So it's an inverse ETF. So let's jump over to TradingView. And first, let's take a look over the past, say, year or a little more than a year. Here's the S&P 500 or the SPY. So we had the run up until about December 21st. And then we entered a bear market all the way till about October 2022. And we've had a nice bull market ever since. Maybe it's a bear market rally. We'll find out. But bear market pretty much from January all the way to cold December. So pretty much the entire year of 2022, the market has been going down. And we can measure from peak to trough down around, call it 25% for a nice even number. So now let's jump over to the SPDN and let's see what happened. Here's 2022 at the start, January, and it went up because it's the inverse. And then this is right around October when the market bottomed. This had a peak. And if we were to measure it, it went up about 31%, or call it 30% for nice even numbers. So again, it's not going to be perfectly matched, but it's going to be within that ballpark. And because the market has been screaming higher all year, if we go year to date, you can see we're down 15% in the SPDN. And year to date, we are up. I don't have the percentage on this one. We're up around 18%. So again, not perfect, but you can see it's a pretty good inverse. Now that's the SPDN. Let's say that your conviction is really high and you say, well, I want to double down or triple down on this bet, but I still don't want to deal with margin. Well, you could get a 3 times inverse ETF, and that is the SPXS. And you can see within the past 5 days, this one is down 4.41%. Again, it's not a perfect 3-to-1 ratio, but it's going to be a lot more than the SPDN, which is only 1.48. This is 4.41. So you're kind of close to that 3 times leverage. And if we were to jump back to trading view, we'll look at that SPXS. And if we go back to 2022, the beginning, all the way to the end of 2022, how much did it go up by? It went up by 97%. So that's almost 3 times that, a little more than 3 times the single inverse, the SPDN, which was only 30%. This is 97%. But again, because the market has gone up a lot, this one is now down over 40%. So you can see inverse ETFs, you want to be careful with them because if you're on the wrong side of the trade, you're going to be losing a lot of money very quickly. You don't have to worry about getting margin called, which is nice, or an options expiry, but over the long run, if we go to all, you can see over the long run, because the market tends to go up, these inverse ETFs tend to just continue to go down. This one's been around since 2009, and it's down 99.9%. So this is a short-term play. It's when you think, hey, maybe over the next 6 months, I think the market's going to turn sour, so I want to have some short exposure. This is a great way. So now the other two that we're going to be looking at is the inverse of the Qs. So right now the Qs, same deal over the past 5 days. As I'm recording this, it's up almost 2.5%. So the first inverse, it's the PSQ. You can see this is down also almost 2.5%. It's 2.31%. And you can see if we were to go look at the past 5 years, so right around January 2022 is at $10, and then it peaked at about $15. So it went up 50%, or if we just want to jump and look at it over here because it's a little bit easier. So PSQ, this is the 1 times leverage. Let's go to the daily chart. We'll zoom into 2022. And you can see right here, it's up around 50%. And then it had a real nice retracement from the peak all the way to now, down 34%. Or if we want to look at the year to date, it's right around 30%. And then the last one, and everyone's favorite when you're trying to short the market, is the SQQQ. So this is your 3 times short leverage Qs. And you can see over the past 5 days, we are already down 10% on this one. So that leverage is really kicking into overdrive. And if we want to look at what it looked like back in 2022, this one was screaming higher. We got to zoom in. All right, that's good. So you can see right around January. Let's turn off the percentage really quick. So we jump over here. We'll go to regular. So it was around $29, and it went all the way up to, well, it peaked right here at, call it, say, $69, up 131% or 137% in a year. So when the market turns south, this could be one where you can make a lot of money very quickly. But again, look at this. Year to date, it's down. Well, let's actually check this way. We'll jump over to the percentage again. This one is down 68%. So again, I'm not a financial advisor, so this is not financial advice. This is just education. But if you're on the wrong side of the trade when it comes to inverse ETFs, you'll never get margin called. You'll never run out. You could hold on to this forever, but it will typically trend down over the long run, and you can lose money very quickly. But if you think we're going to have some type of reversal in the market for whatever reason, you think we're going to see new lows this year, and you think this is a local top, we should have a correction of at least 10%. Well, if your conviction's strong enough, then the SQQQ might be the play, and you can make a real quick profit. But guys, I hope you like this video. Again, for the 4 ETFs, you have the 1X bear, the bear 1X for the S&P 500. That's the SPDN. The 3X bear is SPXS. The 1X bear for the Qs is PSQ. And then the 3X short for the Qs is SQQQ. Again, guys, if you like this video, smash that like button. And as always, I will see you in the next one.